This is Pete Moore coming to you today on a Thursday fast break sponsored by Promotion Vault. Reward intelligence might be a good idea to find out more about your members. I'm sitting in Chicago right now. I am on a higher dose PEMF map, pulsating electromagnetic field. Bam, bam. And I'm going to talk to you about the first two letters, PE, which is private equity. People say, oh, private equity owns EOS. They own Crunch. They own Bake Clubs. They own Dunkin' Donuts. Well, let's find out where this private equity came from. Okay. So if I was an endowment fund back in the 70s, I would only be allowed to invest in public equities like stock market, real estate, treasury bills, municipal bonds, but I could never invest in private companies. I was not allowed to do that. That was called an alternative investment. And there was a new law passed called the Prudent Man Act that allowed endowment funds and pension funds to start investing in things that maybe would give them a higher return, but have higher risk. So what happened back in the 70s, there were a couple of guys who were bankers called Kohlberg, Kravitz, and Roberts. And those guys left Bear Stearns and started to buy private companies. And they went to all the pension funds and they said, hey, give me some money, pay me 2%. I'll keep 20% of the upside. I'm going to go and find some undervalued companies because I've seen thousands of them. And I know that these guys make a ton of cash. And quite frankly, they don't know exactly what they're doing. However, I'm going to go in there. I'm going to put a lot of debt on the business, non-recourse. And I'm going to go get these families that own these businesses that don't have a succession plan or don't want to give it to their kids. And I'm going to say, hey, I'm going to offer you the deal of the lifetime. I'm going to give you $200 million cash for your business. I'm going to go borrow $150 million from different banks. And then I'm going to put a sliver of equity in. And I'm going to go and I'm going to gut the company. I'm going to clean it out. If you remember Wall Street, Blue Horseshoe loves Anacott Steel. Watch that movie. And you'll understand that buying private companies now became an asset class. So you had guys at Bear Stearns. You had a guy named Thomas H. Lee and Partners. You had another guy named Forsman Little. And what they did was they consolidated funds and pools of capital from endowment funds, the schools you went to, where there was $875 billion worth of money. And all these schools and universities and pension funds are looking for returns. How am I going to get a higher return? I'm going to take more risk. If I want to take more risk, I can put a sliver of my fund into private equity. And I'm going to give these guys money on every deal. And in 3 to 5 to 7 years, they're going to return that money. And hopefully they'll get me a 20 to 30% return, where in the stock market, I'm getting a 7 to 12% return. Real estate, I'm getting a 6 to 10% return. And in treasury bills, I'm getting a 2 to 4% return. So little by little, all these groups started to prop up, usually with people's last names, like my boy Brockway at Peter Brockway, Moran and Partners, where I used to work. And their strategy was to go and buy middle market companies, grow them, give them financing to go make acquisitions, bundle them up, and then sell it to the next private equity fund. And those funds were returning anywhere between 18 to 35% returns. And as that started to happen, a lot of these college chief investment officers said, hey, I got to get in on this private equity game. I don't care what they're buying. I'm not really going to ask too many questions as long as they're legitimate businesses and they do their work. And the private equity market became a private equity community. And all these guys and all these women went out there, formed funds, and went out and said, hey, I'm going to charge you 2%. Oh, I'm also going to charge the company a management fee. And I'm going to put a little bit of my own money in, but not too much. And then I'm going to get 20% of the upside. So if I buy a company for $100 million and I sell it for $300 million 5 years later, I made a $200 million gain, which you'll see right up here. And out of that, the partners keep $40 million. Okay. So private equity is starting to eat up the entire economy. There are groups that look at industrial deals only, aerospace, defense, retail, consumer, Halo. And in the Halo sector, EOS is private owned by private equity. Now it's owned by TSG Consumer. Leonard Green owns Pure Gym and Crunch. Mountainside is owned by Garnet Station Partners. So as you see these private equity firms taking more and more of the economy and turning them into private companies, they must grow these businesses. If you are a business that is a target of a private equity fund, you probably have one time to sell the company. And then they're either coming to eat your city and they're going to grow around you through greenfields, or they're going to buy up some of your competitors. So the game is not going to stop. It is going to continue. This is like playing chess and you are playing checkers. Okay. They are able to get debt without any personal guarantees. You don't have to sit down with your husband or wife and think about if you're going to mortgage your home equity and you're going to pledge all of your assets to build a new location. They just call capital. They get debt with no recourse. So private equity is here. It is an alternative to groups such as endowment funds, companies, pension funds investing in other assets, and they're giving their money to groups like Blackstone, groups like KKR, groups like Leonard Green, groups like TSG Consumer, and they're coming and they're going to go buy as many companies as they can, clean them up, optimize them, and then hopefully sell it to the next guy. And what you're going to see on next Thursday's session of Fast Break is how private equity is basically turned into the equivalent of a baseball farm system. So if you want to learn more about this, if those 5 minutes help clarify anything for you, this is PD Mo here from Halo Academy. I've got a class that I'm doing starting on June 24th. It's $495. I'm going to teach you everything you know in 10 hours over 2 weeks. I encourage you to attend. And remember, go Halo.